Sale hit a 15-year high while its top leadership moved into a temporary transition. Sale share price frames the pressure because the stock rally is backed by record volume and better steel pricing, but the next decade depends on execution. The supplied evidence says FY 2026 sales crossed 20 million tons, and the IISCO expansion plan totals Rupee 36,000 crore. The useful part is the test in front of the story, not a broad market slogan. The permanent CMD appointment and Q4 results are the first tests. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is strong operating momentum. The share price hit Rupee 177.70 on April 21, 2026, the highest level since January 2011. Sale also crossed 20 million tons in sales volume for FY 2026, while a 12% safeguard duty on select steel imports helped domestic pricing. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. The rally is real, but the leadership and expansion questions remain. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is domestic steel pricing plus a major capacity expansion plan. In plain English, higher steel realizations can lift margins, while new capacity can raise future volume if execution works. For sale share price, that mechanism matters because the share price story depends on whether temporary price support becomes durable cash flow. The stress point is specific, whether IISCO can expand from 2.5 MTPA to 7.1 MTPA by FY 29 without straining debt. This is the part that makes the headline useful because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on sale shareholders, steel buyers, government infrastructure demand, and plant workers. The rally rewards investors who held through the lows, while the expansion could increase future capacity. Debt reduction of about 7,000 crore in 9M FY 26 helps, but capex may push leverage up again. The practical consequence is the market is shifting from recovery trade to execution trade. That is the viewer value here, understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is whether the new leadership keeps debt discipline and the IISCO project on schedule. A 15-year high does not prove the expansion will deliver on time. That gap matters because large steel projects depend on approvals, contractors, coal costs, and demand cycles. The cleaner proof would be Q4 margin delivery, a full-time CMD, and visible IISCO execution. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner, because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is Q4 FY 26 results, CMD appointment, coal costs, and IISCO progress. Those signals will show whether the rally has earnings and execution support. Sale share price becomes easier to read if margins expand and leadership continuity is confirmed. It weakens if coal costs spike or the expansion timeline slips. The final readout is simple. Sales rally now needs execution to justify it. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.